The Hedgeless Horseman here. This is a follow-up video from my last video where I talked about sentiment, the oscillations of sentiment, and how you can apply simple game theory in your long-term investment approach. And I would just like to follow up first with this chart, which is perhaps an even better proxy for sentiment in the juniors, actually. The last one was Bear Creek Mining only, the chart, and obviously there's company-specific events, etc. And here you have a chart of a ratio between GDX and Bear Creek Mining, basically major miners and Bear Creek Mining. I think this is actually better in terms of a sentiment, sentiment proxy, because here obviously you have these extremes, thousands of percent, etc., and the trading ranges differ a lot simply because the company itself is changing, and here you have more of a out or underperformance relative to gold majors, and which typically happens is that at the bottoms the juniors get absolutely crushed because they have a hard time raising money or whatever, and especially I think it's good in terms of gauging the sentiment of the retail investor, because the retail is, for the lack of a better word, dumb money. So you would expect them to, really panic at bottoms and really buy at tops, etc. And so, I mean, if you just look at this chart, it goes back to 2008. This was obviously the great financial crisis. Then you have the bottom 2015-16, basically the major low in juniors and miners. This is the flash crash of last year, and here we are now. So the GDX Bear Creek Mining ratio has reached this blue level here multiple times back in the 2008-2009 bottom. And obviously, in hindsight, those were extremely good buys because, in only a few years, juniors, miners, all miners pretty much, ramped higher going into the top of the gold and silver bull. So I think it says 1481 100% from the bottom here. Again in 3 years or whatever. Extremely good results, and when it topped, the ratio was all the way down here. And you can see, obviously, I mean, it's been pretty okay in terms of, picking local bottoms and even, local tops. But I mean, the trend was down here, etc. And I don't particularly like, precision trading in that respect. But here, for example, also good buying opportunity. But the real ones, I mean, the ones that I really focus on are when the ratio hit this level. Again, multiple buy signals here. And even though, I mean, price had already headed higher when it hit it for the, I don't know, 6th time or whatever, still great buy in hindsight. This was the major bottom, multi-year bottom, hit this level shortly, and then basically came down all the way to here for a local top. And then the flash crash, it actually exceeded the line like it did here. I think that also, I mean, this was probably the best opportunity that has ever been in miners over the last 15 years at least. Simply because, especially gold juniors, because the price of gold stayed put, the value of the businesses themselves stayed flat basically, and you get a 50% haircut. No brainer, no brainer buy, the biggest no brainer ever. But at the same time, you can see here that okay, first of all we touched it here and it still went down a bit, but recently it spiked again, and that's this bottom here, and now it is spiked again. And I mean, remember that we're in tax loss selling season right now. So I mean, in terms of a signal of how good of an opportunity it should be right now, just from this perspective and how cheap the juniors are, this signals that they are extremely cheap, and we know that we're in tax loss silly season, so they're going to be artificially cheap. So I mean that just confirms my thesis even more that these are levels in the juniors, sentiment extremes that you only see at major bottoms, because they can't really get much cheaper. And again, I mean, just based on where gold is trading, for example, I mean, gold juniors themselves should probably be 100-200% higher from here, even without extremely fraudy, without an extremely fraudy environment overall. So I mean, personally, I'm expecting, if you look at, okay, this is Bear Creek Mining's performance, but like major bottom here, okay, a couple of years, almost 1500%. Here, 744% in I don't know, 6 months. 400% from bottom to top, going out of the flash crash, and we've recently hit similar levels right now. And I mean, the market wasn't even fraudy at this point in time. So personally, I'm expecting 200% on average in my portfolio within the next 24 months, let's say. And I don't see, well, I don't follow that many sectors, but I mean, again, like I said before, this is the most no-brainer buy environment, in my opinion, that's been seen since the flash crash. They don't come around that often, so I'm piling in as much as I can, totally unlevered, because I don't want timing to be an issue. I mean, if it takes 2 years for a 200% return, or if it takes 1 year, or if it takes 3 years for a 400% return, the important thing is those are good returns within a time span like this. I don't want to be levered and be short-term wrong, that they go down 30% and I'm wiped out, and then they head up to 400, or from that level perhaps 600% returns. That's the nightmare scenario for me. Being right on the whole, but getting the wrong result, let's say. Anyway, I personally don't like trading sardines, which I highlighted in the last video where I went through this chart. So I'm just gonna go through how I think about growth stocks and why I think growth is the only the optimal way to play this sector, basically. This is a chart of Great Bear Resources, which was acquired a few days ago for $1.9 billion, I think. Well, there's multiple things I'd like to say about this chart. First of all, which I've highlighted in earlier articles, you don't need to be in pre-discovery to get a 10-bagger. I mean, if you buy, well, I mean, what are the odds that Great Bear would, end up like this. Those are extremely long odds. One in maybe, I don't know, 200-300 juniors. If even that, make a discovery like this. So if you bought like 200 juniors, you would get maybe one of these shorts. So I think overall people way overestimate the odds of a junior explorer making a maiden discovery on their maiden drill campaign. So I prefer, and that I learned that the hard way in I mean, in a sort of way, that I prefer to buy after a discovery. I'm almost have no totally grassroots exploration plays in my portfolio, almost. Because, I mean, if you bought here the day after the discovery, let's say, you would have ended up with 2,274%. Those are mind-numbing returns for such a short period. And if you bought after the discovery, or the first good hole, you would have avoided the 98% chance of there not being a discovery. So I mean, that's the quickest way to lose your butt basically in the exploration sector is to bet a lot on pre-discovery plays. Still, that's what people think they need to do in order to get, the alluring 10-bagger. But like has been shown here, the price went down. Let's say it went down 50 to 100%. Then it became a 20-bagger. So obviously you don't need to be in pre-discovery, because I mean, on the very day of the discovery, let's say, it only went up 50 to 100%. So I mean, you could have paid up for that without taking any risk and then riding this. Okay, let's dig in a bit more here on sentiment and applying basically, let's see here, this kind of oscillations in sentiment and how it why I like growth stories, because you're gonna have these oscillations as well. Tops, top, bottom, top, bottom, top, bottom, top, bottom, top. I mean, there's plenty of deep corrections in here. There's a few like 45% corrections, 60% corrections, 55% corrections, I think. So first of all, if you can't handle, if you wanted to have a 22-bagger in Great Bear the day after the discovery, you would have to be able to sit through 50% drawdowns in your Great Bear position multiple times, and many 30% and 20%, etc. So I mean, if you're one of those people who can't handle seeing a stock go down, or you're out there ridiculing people who own a stock that's down like 30, 40, 50%, I wouldn't be so quick to like laugh at those people, because at least they have the stomach to ride one of these. And if you ridicule those people, basically that tells me that you have no idea how to really compound and beat the market over the long term, because that comes with the territory. Anyway, so you have these swings, and I've marked some stars here just highlighting the fact that, okay, at this sentiment low, price was same as a few days after the discovery. But in the meantime, that's like from September to May. So that's almost a year worth of progress, and I don't have the news releases up, but I'm assuming they hit more and raise some money, whatever. They almost a year of de-risking and progress, and at this point you could buy it for the same price as here. So even though of course the market cap wouldn't have been exactly the same, but let's just for simplicity assume it was plus 20% or whatever the dilution would have been. here people will like, okay, run is over, sell this. Why? It's not that value hasn't gone up. Value has gone up. Let's just assume, I mean, if you draw a straight line, this green arrow here was basically, you know, the growth rate, let's say, because it was sold up here. So if it was valued at this in December 2021 and valued at, or the price was this in 2018. Anyway, so obviously, I mean, the more they work, the more they risk, assuming, you know, net positive in terms of success, that the project isn't, you know, becoming worse, let's say. These lows here represent, you know, an expanding value gap. Because if value is going like this, price is going like that, the opportunity does not go up in a linear fashion, it goes up in an exponential fashion. So that's why, I mean, if there's something I'm good at, it's buying low. I'm very bad at selling. But I understand this dynamic at least. And if you have the conviction, which is absolutely necessary, because you're going to see people all the time that sell, and if you really ask them why they're selling, they're going to say, well, it's going down. Basically, they're taking, you know, due diligence. They're using the Mr. Market as due diligence. And the thing is that, okay, when this happens, you have, again, like almost a year worth of value add. So you bought that, you know, almost for free. I mean, that's such a layup. I mean, this point here was better than this point here, and this point here is better than this point here. Obviously, it just becomes exponentially better, and then it gets gets going again. And then you have the flash crash. I mean, it went down to a level seen here and a bit higher than here. But I mean, this was, again, like many juniors of mine, this was the absolutely biggest no-brainer opportunity you'll see in, I don't know, 20 years on average or something like that. I mean, obvious pickup here. And then it started ramping again. And of course, I mean, if they made progress during this period of time, if you bought it here, that would be a better buy than here, obviously, because you're getting a lot of time, progress, and money spent with success for free relative to this point. And then you have after this opportunity, it started to ramp again. And then you have a dreadful, almost year-long, or over a year-long, 497 days of a grinding movement, slightly down, basically. Probably, I mean, I did a short way back when I thought it looked like a bull flag, and I mean, I'm not a TA expert, but it looked like that. Anyway, here you have the same, you know, phenomena, let's say, because they had multiple rigs, de-risking over 497 days, adding inferred ounces, not in the inferred category, but you know what I mean, adding, making new discoveries, etc. And price went down, and the more price goes down, people are going to be worn out, and at this point in time, there's going to be a truckload of people who can't stand it anymore. Like, screw this, why do we even own juniors? And the ones buying from these people, they are buying 497 days worth of time, money spent, de-risking, you know, occurring, and value created for free compared to, you know, the time it was trading at that level. So again, I mean, this buying opportunity is better than this, even better, and this one is better than that, etc., etc. So I mean, again, it just goes exponential. You know, in terms of opportunity, but people sell when it's gotten, you know, best one could ask for, pretty much. And then finally, when the last weak hand or whatever was shaken out, and sentiment just turned, because I mean, let's face it, I mean, at 29, it was 29 December, just a few months ago it was down at 12. There's no way the project's net present value changed that much in just a few months. There's no way in hell. So I mean, if Kinross says it's worth at least this, then it probably was worth this a few months ago. So can you see the value gap here? And this is mostly sentiment driven again, because it has the ups and downs. So this is why I like growth stocks, because even though compared to Bear Creek Mining, where you have this sideways grinding movement, you have to time base. I mean, if you bought this bottom, you wouldn't be much better off at this bottom. But if you have a growth stock, typically at least the medium term bottoms, let's say, they're at least higher all the time, and the tops are at least higher. So I mean, in Bear Creek Mining, if you got out here, you might as well have gotten out here if you bought here. But in Bear Creek, no, Great Bear, for example, I mean, if you bought here, you'd much rather get out at this top than that top. And obviously the final top was way over here. So I mean, your mistakes, your timing mistakes are more forgiving, because if you bought the high here, if you just held on, you'd have been bailed out as soon as this point in time. Sure, it dropped down, but then it just zigzagged its way up. So I mean, just holding on to growth and buying the oscillations, that's gonna get you much higher returns than buying the oscillations in a trading sardine. And then we have, I'm just gonna run through some companies where I think not the pace that Great Bear is doing it, but where you have these the value trend, the success is like many juniors, at least the ones I own, I think the intrinsic value has been going up. I just marked some news releases here, for example, but price has been going down since we're in tax loss selling, and I liken that with this movement in Great Bear, and then all of a sudden one day enough is enough, the sellers are gone, and it starts to reprice all, it starts to reflect all the value that's been created over a long period of time. So I mean, if the value curve is going like this and price is going like that, I mean, the longer this goes on, the more this gap will widen, and the catch up will be even more, even better. So that's why I have an easy time buying low, because I'm looking at this gap all the time. So if it goes down, majority of people will give up. While I look at this gap and I just become greedier and greedier and greedier and greedier, because one day, on average, the price is going to turn, and then one of these days, it's going to catch up to the value trend, and perhaps if we go into a really hot environment, it's actually going to do what you can see in Great Bear. Let's say that this was actually an overshot of the value, and then it corrects whatever. And also, I mean, if you look at this from a TA perspective, it looks kind of like a no-brainer, major bottoming pattern, reverse head and shoulders. And of course, a typical trader would want to wait until the break is confirmed. Let's say they wait until price gets up here. But if I am like I don't buy any company almost based on TA. But I mean, I'm looking at this since I believe in the company's fundamentals, in this case Timberline Resources. I'm just looking, buying here is not only front running the closing of the price to value gap, but I see it as front running this major pattern, because if I think there's an 80% chance that Timberline will cross this neckline here, then it also means there's an 80% chance that this pattern will, be concluded, and that's I think it's a target price of like 95 cents or whatever. So that's a multi-bagger just from there. It's fortunate when you have these kind of situations. I think again, it's not like I don't own Timberline due to a technical pattern, but this is a pretty obvious technical pattern. Then we have one of my absolute favorites right now, Eloro Resources. In about a year, they've drilled enough to basically start to form a maiden resource. I mean, the ROI on this drilling they're doing, there are quite a few juniors out there, I think, that would have a hard time scraping together 1 million ounces of gold from 40,000 meters of drilling, at least, a year, let's say. For different reasons, obviously. I mean, there are some, like a high sulfidation system, they might, be able to drill it up way quicker than take Windfall or Eskay Mining, for example. I mean, they drill 1 million meters and have, I don't know, 5-6 million ounces. I mean, 1 million meters. Anyway, Eloro's, I think it's gonna have, show 300 million ounces AG equivalent plus, something like that. It's gonna provide a margin of safety in Q1 sometime. I think the market is totally clueless with Eloro. I think it has gotten a bad rep for some rumors about arsenic and Bolivia or whatever. But I look at this as kind of like the Great Bear scenario here. Eloro has been adding a ton of de-risking, doing a ton of de-risking efforts, and you could basically buy it now at the same price than before, all the de-risking efforts. So you're buying 316 days of work and value creation for the same price. This is just, in terms of how I have no respect for the market. I mean, this is just, ridiculous in my opinion. And you kind of have, smaller patterns of the same phenomena here. I don't remember the news releases between this, but anyway, obviously, if you liked it here and you could have bought it at the same level here, 100 days later or whatever, then it started to reprice. Then we get into a sentiment high again, yada yada yada. So I'm expecting. I mean, personally, I'm expecting Eloro to. Well, first of all, I think this is a big. I think this is a big bull flag, basically. So I think it's gonna go up. Well, extend this because they'll probably be drilling for years. Something like that. This is one of my highest conviction plays because I think it has one of the best risk-reward profiles in the space, and it's, in my opinion, mind-blowing that not more people seem to think so. But hey, I'm not, I can't complain because again, I can buy 316 days worth of work value money spent in the ground for the same price as here. Then Newfound Gold, I think that's also one. I mean, again, you have these sentiment lows and price back to April 2021 levels, and I mean, here you have a similar thing in February. Same prices back then, but you got a couple of months extra drilling, etc. And then it started to catch up with the, let's say, value creation trend and even overshot it. And now we're, have undershot it, obviously because of the nugget issues. But assuming that the intrinsic value hasn't gone down too much, I would still expect let's say that the trend is actually like this or something. So then I still expect a catch up here and then probably, overshot again and then go down, yada, yada, yada. But I do think this is, to me, this is another, layup, basically. And of course, I mean, this opportunity is probably better than this, so this is better than this, and better than this. So again, you know, the exponential curve, etc. Eskay Mining, same thing. Here, smaller one, 105 days worth of work time, de-risking, whatever, figuring out the geology. Could have bought here at the same price as here and get everything that's happening between for free. Then the revaluation happened, and then it topped around here. Sure, made a higher top there, but we're right now back to the same level. So that's 339 days of de-risking, value add, and new discoveries that you're basically getting for free if you're buying here relative to there. So if you liked it here, you would like, you know, super duper love it over here, because they found you know, outcropping Scarlet Ridge, Vermilion has been, you know, I mean there's a bunch of target. I mean the Blue Sky has, Blue Sky has for sure. I don't think it's followed this line. I think it has more followed, like, well, I don't know how high I can draw it, but I mean, if the EV on one target could be like, I don't know, at least $50 million, and they have, I don't know how many targets, and I mean, the way John the Decker has figured out stuff, and the way SkyTem has, you know, worked in identifying drill targets. I mean, the implied expected value of SK has just been on a constant ramp from this period to this, and you can buy it at the same. It's like ridiculous. Again, why this mining sector is, you know, if you're a bit diversified, because you know, you can get unlucky or whatever. It's the market is totally clueless, hopelessly clueless. Mantaro Precious Metals, another example. Started out with 5 silver projects, valued at like $58 58 cents per share. And they've been doing work, and then they acquired what is now their flagship project, and the price was down 40%. So a buyer here got you know, 40% discount on the 5 silver projects, plus a new flagship gold project. It's like a district play, fully permitted. But that didn't stop it. It went down to it went down further, so it was down 76%. So one that was buying here, I ramped up my buying around here. Got 76% discount, okay, excluding cash burn, on this 5 silver projects, and you get the flagship project for free. And then shortly after, they announced 73.6 recovery from single pass gravity on sulfides. So I mean, okay, how many projects can, you know, show that? Preliminary, of course, but the let's say the expected value from this news release alone was like, I don't know, $8 million. I don't know. I think the enterprise value right now is still around $5 million. So it's just, you know, again, how anyone can think this market is hard to beat is beyond me. Because there's, right now especially, I mean, there's so many no-brainer opportunities. Cabral Gold, they have been drilling. No barn burner holes per se, but they've found, you know, oxide blankets, which I think could have, you know, some significant economic value. So they've been drilling, making discoveries, especially the oxide blankets, which will be, I think, very economic on a per ounce basis, much more than typical ounces. And like we've seen in a lot of growth stocks currently, the sentiment and tax loss selling has brought it down. So again, with the other stories, I think the opportunity has gone. Well, I can find now. Anyway, it has gone exponential, and I think it will catch up to the value trend once sentiment has bottomed and we go into the next. We go towards the next sentiment peak, basically. That's about it. This is not, this is not investing advice. I own all companies mentioned. I have shares in all companies mentioned, and I think everyone except Great Bear Resources is a banner sponsor. So I mean, do your own due diligence. Consider me, totally biased. Make up your own opinion, and yeah, basically don't risk any money you can't, afford to lose. This is a risky business. Thanks for listening.